Ladies and gentlemen, good day and welcome to the Irfc Earnings Q2 FY22 Earnings Conference Call hosted by Dam Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Pritesh Bum from Dam Capital Advisors. Thank you and over to you, sir.
Thank you, Janice. Hi, good afternoon, everyone. On behalf of Dam Capital, I would like to welcome Mr. Amitabh Banerjee, CMD of Indian Railway Finance Corporation Limited, to give his opening remarks, highlights of financial performance, followed by Q&A. Now, I would like to hand over the conference to the CMD. Thank you, and over to you, sir.
Yeah. I hope everybody is on board. I mean, from IRFC team also.
We are on board, sir.
Okay, fine. Yeah, good afternoon, everyone. All my valued investors, as well as all the other stakeholders. Very happy Dhanteras to each and every one of you, along with your family. I'll just go through the presentation. I hope everybody has got the presentation. So IRFC happens to be the dedicated market borrowing arm of Indian Railways, we have financed 67.3% last year out of a total capex outlay of 1,51,000 crore. That's about 1,51,000 crore of Indian Railways. We have financed about 1,04,620 crores last year, as you all know, which constituted about 67% of the total capital outlay. That was the highest ever annual disbursement to date since 1986 at 1,04,369 crore. Our AUM has grown at 37.5% H1 on H1. That is, the AUM has grown at 35.7% this H1 as compared to last H1, and now it stands at 3.82 lakh crore. That is 3.82 trillion rupees. We have got a strategic relationship with MOR. MOR being the major shareholder of IRFC with 86% shareholding. And MOR also happens to be the almost the sole client, accounting for 98% of the total AUM. We have a cost plus standard lease agreement with MOR every year. We add a certain percentage of margin over the weighted average cost of capital every year while entering into a standard lease agreement with Ministry of Railways. There has been a consistent spread on both the rolling stock as well as the project assets over the last 3 years. Even starting from 1986, there has been a consistent spread, except for one particular year where there was a dip in the spread, and thereafter it has always remained constant. Now, IRFC happens to enjoy the highest trade rating from all the top credit rating agencies in India at AAA. And we have diversified funding sources, both in the country as well as overseas. And we are characterized by a competitive cost of borrowings with a view to keep the financing cost low, so that the viability of the railway projects and the rolling stock acquisition by Indian Railways remains intact. And we also have a very strong asset liability management in place, and the cumulative gap over 5 years has always been nil. As far as the net worth is concerned, the net worth to end of H1 FY22 has grown to 38,917 crore. As you are aware, in this half year ending 30th September, the profit has grown by 59% over the corresponding period of the previous year, and The revenue from operations has grown by 26%, again on a half-yearly basis. And the return ratios I'll come to later. They're pretty healthy and better than what we had last year. And IRFC also enjoys regulatory exemptions from various oversight agencies. Illustratively, we are exempt from the RBI's asset classification norms, provisioning norms, exposure norms, and so on and so forth. And as of now, we do not pay any tax, as we are exempt from. We are not exempt, but we are actually after having opted for the normal tax rates, we are now we are liable to pay corporate tax at the normal rates, and because of the presence of the accumulated depreciation, unabsorbed depreciation in our books of accounts, which happens to be more than the net profit, the taxable income comes to zero. Therefore, we are not liable to pay any tax. This has been the case with effect from last financial year. Now, if you look at the penetration of Indian railways vis-a-vis those of other railways, you will see that say in Russia or USA, where the route kilometer per million population is of the order of 592 and 464 respectively, in India it's only about 50 kilometers per million population. So which signifies that there is a lot of scope for further penetration and into the Indian mainland, and therefore there is a lot of scope for further capex expansion of Indian railways in times to come, and which is vouchsafed by the fact that there is a very ambitious National Rail Plan 2030, which is in place, which is a part of the national infrastructure pipeline. Now, MOR's increasing dependence on IRFC for financing is evidenced by this particular graph, which shows that it has increased from 36% in FY18. At that time, we had just, FY18, at that time, it was only 1,02,000 crore was the capex outlay of Indian Railways at that time, of which we financed about 36%. And last year it was 1,55,200. So this is and last year, as I said earlier, we have touched 67.3% of the total capex outlay of Indian Railways. So it has increased from 36% in FY18 to 39.4% in FY19 to 48.2%. So we have been galloping ahead as far as the proportion of capex outlay is concerned. And IRFC has been playing a strategic role in financing the growth of Indian Railways. The assets under management, if you see, it has grown substantially from 1,54,535 crores to 3,82,000 crores to end of September 30, 2021. So it's a huge jump, and the disbursements, if you see, the disbursements to end of this for this Q2 is about 18,256 crores as against 18,256 crores as against 8,270 crores in quarter one, and to end of H1 FY22, the total disbursement is of the order of 26,527 crores as against 18,565 crores in the corresponding half year of the previous year of FY21. Now, if you look at the disbursements, AUM breakup, if you see the AUM breakup, 98%, as I said, is of the Minister of Railways. The breakup of 98% is 53% is constituted by the advance against railway infrastructure assets, that is the advance that we have given against the project assets of the order of 2.01 lakh crore, and the lease receivables on account of loans given for procurement of rolling stock, that stands at 1,73,000 crore, 1,74,000 crore. So 53% is accounted for by the project, and 45% is accounted for by the rolling stock. And the rest 2% is on account of loans given to the other SPVs like RBNL and INCON, which stands at about 6,852 crores. Spread, as I said earlier, which has been remaining constant at 40 bips over the weighted average cost of capital in case of rolling stock and 35 bips in case of project assets. And that has remained constant over the last 3 years. The borrowing mix, if you see, it's a pretty diversified borrowing portfolio. The major part of it is constituted by the domestic bonds, including the taxable bonds, the tax-free bonds, as well as the 54EC capital gains bonds, which constitutes about 49% of the total borrowing portfolio, followed by rupee term loans. These are structured loans from the banks and financial institutions, which stands at 27% of the total borrowing portfolio. Then followed by ECB, which constitutes about 16% of the total portfolio. And then we have 5% NSSF, that is the National Small Savings Fund. The borrowing mix, as on September 30, if you see, there has been a jump in case of both RTL as well as domestic bonds. The RTL has grown from 22% to 27%, and the domestic bonds has really come down from 59% of the total portfolio to 49%, and that has been taken over by the rupee term loans and ECB. ECB was 10% in the half year of FY21 at that point of time, and to end of September 30, 2021, the ECB has grown to 16%. This is the total borrowing mix to end of September 30, 2021. And as far as the rating is concerned, it's AAA by all the credit rating agencies, and at the international level, we are at par with that of the sovereign, with Aa3 by Moody's and BBB minus by S&P and Fitch, with a stable outlook. The net interest income to end of for H1 was 3,041 crores, and the PAT is at 3,003 crores. The operating expenses, as we have been maintaining always, that it is very, very low at 0.12%. And this year, I mean, in H1 also, this trend has been continuing. It's a lean organization with low establishment cost, and the overheads and other incidental expenses are also on a very low side. Irfc has been giving out a consistent financial performance over the years with the return ratios. If you see return on assets, that has grown to 1.47% annualized to end of September 30, 2021, and ROE is at 15.4% for the H1, and the capital adequacy ratio has grown to 465% with a net gearing ratio of 8.81 at the end of H1 of FY22. Net interest margin has grown from 1.45% to 1.64% annualized to end of September 30, 2021. The key ratios are the net interest margin, as I said earlier, is 1.64%, return on equity is 15.4%, net gearing ratio is 8.81, and 465% is the capital adequacy. Now, the revenue from operations, that is at 9,272 crores, which has grown by 26% over the corresponding period of the last year. And the profit has grown from 1,886 crores in the corresponding period of the last year to 3,003 crores this year, registering a growth of 59%. Net worth has grown from 31,686 crores to 38,917 crores in the H1 ended September 2021, registering a growth of 23%. And total borrowings has also gone up from 2,45,000 crores to end of September 2020 to 3,42,000 crores, registering a growth of 40% in September 2021. And the EPS is 2.3, and ROE is 15.4%, 1.47% is the ROA, NIM is at 1.64%. This we have already dealt with. And the total borrowing mix I have already told you. The maximum portion is of domestic bonds, which is at 1.69 lakh crore out of a total borrowing of 3.43 lakh crore, closely followed by rupee term loans at 91,900 crores, which is about 27% of the total borrowing portfolio. So I think that comes to the end of the presentation. I am open to the questions. You will please start asking the questions.
Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, we will begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Hardik Jain from Whitestone Financial. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. Sir, although our capital adequacy ratio is quite high, but our net gearing ratio is around 9 times. So what are your thoughts on this? Because can we go up to, say, 11, 12, 13 times gearing ratio? Because why I'm asking this question is because for, say, in this year you'll add, say, 6,000, 7,000 crore to your net worth. But if we leverage it only 9 to 10 times, then the incremental ROE gets diluted, isn't it?
Yes. You're right, absolutely right. And then if you recall in the last investors call also at the after the Q1 results, we had dealt with this point also, and at that point of time also I had specifically mentioned that we are okay with going beyond 10 also as far as the debt equity is concerned. With a high capital adequacy ratio, I think we should be okay with going beyond 10 in times to come.
Yeah, and in case you go beyond 10, say you go 11, 12, so how does credit rating agencies view this? Does it impact our ratings then?
No, it doesn't impact the ratings. We have already got the opinions from the creditors also, and they have also okayed. I mean, there's been no reservation on the side of the creditors as far as this.
Okay, so increasing the gearing does not impact the ratings.
It would not at all impact the ratings.
Okay. Thank you. That's it. Thank you, sir.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Sandeep Khurana from Inside Financial. Please go ahead.
Good evening, sir. This is Sandeep Khurana. I wanted to ask you, you said that, you borrow from the market and then you deploy with the railways. So, what is the sequence? Do you first borrow and, keep the funds with you, and as and when the railways, ask for the money, you disperse? Or is it that, you first railways, demand and then you start the borrowing?
Yeah, that's a good question. In fact, nobody has asked this question earlier. That's a very pertinent question. You see, it's not, the sequence is like this. We get the demand from railways first, and then we borrow the money, and then we disburse the amount to Indian Railways. But all of this happens in one day itself. The reason being that we keep the sources of borrowing ready with us, and as soon as we get the requisition from Minister of Railways, we borrow the money. Now, the point is that, you'll be knowing that our business model is the financial leasing model. So we basically buy these assets and then lease them to, on a financial leasing terms to Minister of Railways. That is the thing, because that's the allocation of business rules. We cannot directly lend to ministry. No ministry other than Minister of Finance can directly borrow from the market. So on that logic, we also cannot directly lend to Minister of Railways. So we buy these assets and then give it on these terms to Minister of Railways. Having said that, what we do is that we get our loan sanctions ready from various commercial banks as far as the rupee term loans are concerned, or and other sources of financing. We keep it ready, except the bond issuance. Of course, bond issuance we do only at certain points of time.
Sorry to interrupt you, sir. That is specifically I'm referring to. Your domestic bonds, you said that 59%. Of this 59%, how much is the tax-free bonds, that you, the tax savings bonds, that you. So, this sequence, will be disturbed by the tax-free bonds.
No, I'll tell you. The point is that as far as it's not a question of tax-free or taxable bonds. Tax-free bonds we had issued only up to 2015-16. Thereafter, we have only been taking recourse to taxable bonds because we did not get the go-ahead signal from Minister of Finance. We have to get the approval of Minister of Finance, but they did not get the approval beyond that. But tax-free bonds would not be the major portion. It would be the minor portion of the total bond issuance and the 54 AC bonds. Now, what happens is, yes, the bond issuance takes time. So what we have is that we generally know that there are certain demands from the railways, especially on the rolling stock funds, which we know that at the end of the month, it would be, generally we give it at the end of the month. Therefore, we time the bond issuance in such a manner that the day that we have the pay-in against the bond issuance, we are able to disburse the same to Minister of Railways on the same day. Very important fact here is that we don't keep the cash with us. You'll be surprised to know that IRFC does not keep cash IRFC does not keep cash.
That was my primary concern, sir, actually. The fact that your net gearing is only 8.1. So
let me finish. It's a back-to-back arrangement. We don't keep it fallow. So
okay, sir.
So your point is that this is a point of concern.
Yeah, idle cash, sir, is the point of concern.
Yeah. Why? In what manner? You tell me.
No. I said, since your net gearing is only 8.81, and you said it can go up to 10 also. So that is a possibility is that you must be having idle cash.
No. We're not having any idle cash. That's not an indicator of any cash reserves. We don't have any idle cash. It's absolutely back to back.
I have just one more question, sir. Sorry for the other participants. Just one more question, and it's very important. You see, in IRCTC, the Ministry of Railways, issued one circular. They had to withdraw it. So it is basically a dictate of the Ministry of Railways. So do you see any possibility of any such dictate coming, in your case also, say, for example, reducing the net interest margin for you? Is that a possibility, sir?
Absolutely ruled out. Unequivocally, it is ruled out.
Do you have contracts? No. Do you have contracts with the Ministry of Railways when you enter into a lease arrangement or a borrowing and lending arrangement with the Ministry of Railways?
Yes, of course. We enter into we enter into a lease agreement, a standard lease agreement every year. As far as
my concern is, I am a very large investor, sir. I have deployed huge resources here. And so this company is my own company, but I have deployed very large sums. Now my concern is, similar arrangements would be there for IRCTC also. They must be having some arrangement with the Ministry of Railways. And one fine day, one circular comes that the sharing is now 50-50, between the Ministry of Railways and IRCTC on the convenience fee. So do you see, any possibility here also?
No. I've already ruled that out. There's no possibility of going down. There may be a possibility of going up in days to come. As far as going down is concerned, that there is no possibility. Because we are charging a very low margin, and we have already we are in a regular discussion with the ministry, and there is no such call which is expected from Minister of Railways in foreseeable time.
I am really appreciative for giving me time, sir. Thank you so much.
Not at all. You're always welcome. Thank you.
Okay.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1. The next question is from the line of Nitin Gandhi from KIS Trade Capital. Please go ahead.
Hello. Thank you very much for taking the question. Can you share something on your dividend payout policy? If it's stated and
you see, So the dividend payout policy, we are basically governed by the DIPAM guidelines in this regard. and that says that 30% of we have to pay dividend at the rate of 30% of PAT or 5% of net worth, whichever is higher. So we generally stick to that guideline. In that respect, last year we had paid more than 31% of the total PAT by the obligation. And this year also we have announced an interim dividend of 1,000 crores.
Right.
So we will be guided by this guideline only, and we will not go beyond below it. I mean, we will not deviate from this guideline.
You will be keeping it around 30% only, not likely to increase to 40 or 50.
Yeah. We will try to, because you see it's an NBFC, so we need to build our net worth also in order to raise funds from the market. So if you go overboard as far as dividend distribution is concerned, then it might be counterproductive for the interest of the organization.
Mm-hmm. Yeah, so that means this year if its earnings are likely to be 5, so maybe you will be declaring 1.5 to 1.6 as a dividend.
Might be, yes. It depends on the, yeah.
Excuse me, sir, does that answer your question?
Yeah, I am complete.
Thank you. Reminder to the participants, if you have a question, please press star then 1 on your touchtone telephone. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good evening, sir, and thanks a lot for taking my question. So, sir, first question is that, this tax benefit that we have, is it sort of perpetual benefit for us, or at what point of time do you feel that we will start paying 25% corporate tax?
You see, the point is that, we are subject to this rate of taxation only. Only thing is that since we have a huge unabsorbed depreciation balance, that's why, which is more than the net profit, therefore the net taxable income comes to below zero. So that is why we are not required to pay profit. Now, perennially in the sense that since the asset base is going up, and resultant, the obvious effect is that the depreciation would also be accumulating. The unabsorbed depreciation would be accumulating. So in the foreseeable future, say for the next decade or so, we don't foresee any kind of tax payments under the extent tax system or under the extent tax regulations. We are not required to pay the tax, at least going forward, because this balance of unabsorbed depreciation would be going up over the years with the acquisition of more assets.
Understood, sir. And secondly, sir, one thing which I could not understand is, so if I calculate your revenues as a percentage of the assets that we have, which is 3.7 lakh crore, so it comes to around 5%. Now, since you have a spread of around 40 basis point and your leverage, let's say 9 times, so you get additional 360 basis point, 9 into 40 basis point. So your return on equity, in a way, because there is no OPEX and no provisions on bad loans, so your return on equity sustainably should be your blended yield on asset, which is 5% calculated, plus your leverage into the spread, which is 360 basis point at the current leverage, which is around 8.6%. But your calculated ROE comes to around 15% for this quarter. So what explains this anomaly, sir? And what are our sustainable number for return metrics on equity and assets?
You see, as far as this, it's not an anomaly, basically. The point is that we are not only utilizing the amount that we are getting, that we are mobilizing through the loans or the issuance of bonds, be it short term or the long term or the ECB portion, but also we are utilizing the funds from the net worth, from the equity infusion by the government, as well as the public now after the IPO, and the reserves and surplus. So those that actually accounts for the higher ROE apparently, as compared to which does not really match with the with the margin that we are charging from Ministry of Railways. So apparently it might seem to be on the higher side, but that we are basically leveraging on the other sources of finance, which does not involve any cost.
Sir, what is the rate of interest that you are charging to Indian Railways?
Rate of interest, no, what we are charging is 0.4% over the marginal weighted average cost of borrowing in a particular year, right? So if it is 7%, if my weighted average cost is 7%, then I charge 7.4% on Indian Railways as far as the rolling stock is concerned. Same is the case with project assets. If it is 7%, we charge 7.35%. So that is the way we structure our leases.
And what will be your marginal borrowing cost right now, weighted average?
The weighted average cost was 6.51% at the end of March 2021.
Yes. So that is what I was saying, sir. Since you're on equity, you will earn 6.5 and then you will leverage 9 times on 40 basis points. So you will earn around 10% return on equity. 6.5% you will get free on your equity.
Yes,
and
yes.
360 basis point you will get additionally on your spread leverage. So then it's a 10% ROE sort of a business. Is that the right way of looking at it?
No, I mean, I don't know what is the formula that you have employed, but you are saying that 6.51% would be the thing on. You see, it will not be 6.51%. It will be about 7%.
Yes, 7% on equity, and then you will earn 360 basis point more on your
so
debt.
if you calculate, you see, these are all in the Excel. If you calculate, you will find out that there's no anomaly. It's whatever the ROE is actually accurate. So you can just get in touch with our GM, Mr. Ojha, and he will tell you the exact calculation.
Okay.
So there's no anomaly whatsoever.
Understood, sir. And now, sir, the other question is, more pertinent to the business side, which is, we were hearing some news reports wherein I think Railways have asked that for their tenders, not only the railway PSUs but other bodies should also be invited to competitively bid for such projects. And so my question is that, tomorrow Railways may also want some other body also to finance their projects in addition to IFRC, or is there a monopoly which is guaranteed, or how do you look at this? Because tomorrow someone else can also fund these things at a very competitive cost and maybe at a cost better than your firm also. So in which case, do you see that possibility happening?
Okay. Yeah, that's a good question. Now, you see, the point is, as of now, IRFC happens to be the dedicated market borrowing arm of Ministry of Railways. So as of now, it enjoys a status of monopoly. But it has enjoyed the status of monopoly not on the basis of its of the way it has been formed or the relationship between Ministry of Railways and IRFC, that they can only take money through IRFC. That is not the case. If they want, they can go to any other financing institution also. I mean, nothing prevents Ministry of Railways even now also, if they feel that they are not getting the least cost financing from IRFC, they would definitely go out, and there are other NBFCs also who are there in various other sectors like PFC, RAC. I mean, there are so many other NBFCs are there. But if you look at the average cost of borrowing of these organizations vis-a-vis IRFC, you will see that the IRFC enjoys a lot of cost advantage vis-a-vis these organizations. We are at least 15 to 20 bps lower in the market as compared to our fellow NBFCs in the market. So we get the money from the market at the least cost possible, and that is borne out by facts, and that is borne out on the. I mean, if you look at the net also, you will see that we enjoy the best rate as far as the fund mobilization is concerned.
Okay.
Nothing prevents Minister of Railways to, for instance, in some projects like dedicated freight corridor or in case of high-speed rail, they have taken finance from through Ministry of Finance, that is G2G kind of borrowing they have taken resort to with JICA or World Bank. But that is G2G. I mean, that is not through any financing institution. But as far as the EBR is concerned, that is the extra budgetary resources is concerned, we still enjoy the same, the same status, the same that that we have enjoyed through the years since 1986, and that we still happen to be the dedicated market borrowing arm of Indian Railways. And going forward, I don't foresee any kind of any other organization who will be able to match the kind of the cost of funding that we arrange as on date. Yes.
Understood. And in your opening remarks, you had mentioned that except for one particular year since inception, which was 1986, this spread of 0.4% and 0.35% has been maintained. So, sir, if you can shed some light on what were the circumstances and which year, these caps were reduced and under what circumstances?
No, it used to be 50 basis points since 1986. And then in FY18, it was reduced by about 10 bips, to 30 bips. I mean, at that time it was decreased by 20 bips, to 30 bips. So from 50 to 30, because of there was some headwind in the revenue generation of Indian Railways. They were facing a lot of issues. The freight revenue had gone down, and so both of us decided. In fact, Indian Railways as well as Irfc decided that we could decrease it only for 1 year, and the next year it was again raised by 10 bps. Now you must understand that this decrease in the margin that happened in 1 year, that is 2017-18, that happened only for those loans or for those lease structures that we had made during that particular financial year. It did not have any impact on the previous leases, or it did not have any impact, in the prospective years also. So it was only those leases which were entered into in that particular financial year. It got a hit of about 20 bits. And that was the reason that there was they were facing adverse, revenue generation and revenue streams in that particular year. That is why this margin was tinkered with. Otherwise, it has always remained at one particular level, and that has been thereafter from FY19 onwards, it has always been the same at 40.
And now you don't feel any, you don't see this changing at the foreseeable future.
You see, I'll tell you that we are the most what we call the most adverse financial situation in the last financial year. That is FY21 in the wake of COVID-19, and there was practically no generation of the passenger revenue by Indian Railways, and it went into a lot of issues as far as the balancing the budget was concerned. But still, we persisted with 40 bits, and they had no problems whatsoever. And in that particular year only, incidentally, we had the maximum disbursement to Indian Railways, and it was all at the same level. So despite a very adverse financial situation during this COVID year, so to say, that is FY21, there was no impact on the margin. So that would be a good example to substantiate the fact that going forward also, we don't foresee any kind of an adverse impact on our margins.
Thank you, sir. Thanks a lot.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Pavan Parodia, individual investor. Please go ahead.
Yeah, hi. My question is for this half year, why the additional financing is just around 25,000 crore in H1 in comparison to the whole of last year it was 1.04 lakh crore. So why it was so less in this particular time?
No, it was 26,527 crores for the half year ending September 30, 2021, as against only 18,565 crores during the corresponding half year of the previous year. So it actually went up from 18,000 crore to 26,000 crore. It did not go down. It has gone up.
Okay, so is it in the March or in the second half, is it generally more than the first half?
Yes. No, not only second half. It generally picks up in the Q4 segment, and that too mostly in the month of February and March. I mean, it takes a leap. It doesn't only increase; it takes a leap really in Q2 and Q3 in February and March. So Q4 is the quarter which sees the maximum disbursement. But as of now, we have already disbursed 26,000 crore, 26,500 crore, as against 18,500 crore last year. So it is very much on the higher side.
Okay. And the other question is already asked regarding IRCTC, so that is already asked. So I'm done. Thank you.
Yes.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, one question I had in terms of the long-term growth rates that you envisage. Hello?
Yeah, please repeat your question. Yeah, there was some music which came in between. Yeah, please.
Sure. Sir, now earlier we were providing a smaller part of the railways capital outlay at around 36%. Now we have already reached closer to 70% or maybe higher this year already. So then does it mean that after few years we will start tracking more or less growth in our disbursements which will be in line with the railway capital outlay, which may be closer to 8 to 10% as per the GDP growth rate?
Yes. I mean, you see, the basic thing that we have to remember is that we finance the EBR portion of Indian Railways. That is the extra budgetary resources. Now, with the the budgetary grant, obviously it has its limits. The grants are the government budgetary support is given to all the ministries, all the spending departments of Government of India, and there is a limit to which that can be given. Now, whereas there is a huge capital outlay that is there in the next 10 years or so, and as per the National Railway Plan, it has got already about 11 trillion rupees of expenditure lined up on railway electrification, on multi-tracking, on station upgradation, on upgradation of signal and telecom equipment, and so on and so forth. There's huge, any number of capex programs which are there in the pipeline. And with a limited government budgetary support, naturally the dependence of Indian Railways on IRFC would that much get increased, or that it would be that much heightened in course of the decades. Therefore, the reliance of Indian Railways on IRFC would be greater as we go ahead. I mean, that is what is expected, and that is what we envisage. Now, I mean, beyond that, we will not be able to say much, but that is the level at which we will be progressing, with the numbers that you have just given of the GDP growth, yes, we shall be going at that level as far as our disbursements are concerned.
Understood, sir. Any guidance for this year? What sort of growth are we looking at on our AUM?
Well, already we have crossed 3.82 lakh crore to end of September it would definitely cross 4 lakh crore and somewhere, but it is as of now we have got a mandate of 65,256 crore for this year, out of which we have already disbursed as on date as we speak. We have already disbursed about half of it, 30,630 crores we have already disbursed as on date, that is on 2nd of November. So another 35,000 crores we as per the original mandate. But generally this mandate is revised in course of the year. So we expect that this year also the mandate would be revised upward. And then that would decide but at least there would be a disbursement of 35,000 crores more as per the original mandate in course of the year. And then depending on the further requirement of Indian Railways, the AUM also would be growing in that, to that extent.
But last year you had disbursed 1.04 lakh crore. So you expect
that was a bit of that was a special year in which there was a lot of challenge on the revenue front of Government of India. So that is why the government budgetary support was that much limited, and that is why there was extra reliance on this extra budgetary EDR capital. This year it is a bit better as far as the GBS is concerned, but still the requirement of capex is of course it's quite high. So we have to just wait for some more days to know what the revised outlay would be.
Yeah, even a year before that we had disbursed 71,000 crores. So
yes,
which was a non-COVID year. So I think some growth rate on that number, is that right?
Yes, of course. Well, we are anyway at 65,000. That 71,000 happened when the original was about 50 odd. So the original mandate was 50 odd, and then it became 71. So here, this year also, we expect that it would be higher than the original mandate.
Okay. Understood. Thank you.
Thank you. The next question is from the line of KU Rasher from PNB MetLife. Please go ahead.
Hello.
Yes.
Thank you for this opportunity. So I had a question regarding the assets we finance, the infrastructure assets we finance. So on that, I think there was an earlier guidance that the standard lease agreement is yet to be signed. So just any update on that?
Yeah, the standard lease agreement on the project assets actually, because we had a moratorium period of 5 years, which has just expired in FY21, and that is finalized. It is on the cusp of getting signed by both the parties.
Understood. So I understand these are still, the payments would be still under moratorium for the project assets. And
that is the reason. That is the reason it took time. But anyway, it is on the. It has been almost finalized, and the lease rentals from project assets also would be starting from this financial year.
Understood. So, that was my only question. Thank you.
Yeah.
Thank you. Before we take the next question, I'd like to remind participants to please limit your question to 2 per participants. You may come back in the question queue if you have a follow-up. The next question is from the line of Amit Bhatt from MIT Engineers. Please go ahead.
Hello, sir. Congratulations for the great result again. Sir, you said that in one particular year, in 2018, or I think 2017-18, government reduced your margin of 0.4% to 0.5% to 0.3%, and again revised it to 0.4%. So that is, you said that that affected only the disbursement of that particular year. But is there any scope that, because this government and this finance minister Babu, they are coming with some crazy things nowadays. So there is a possibility that someday they will come and, retrospectively, they will, cut your, this margin from the entire disbursed amount, 3.7 crore or 3.8 lakh crores. Is there any possibility of that?
I don't think so. I mean, there's no such possibility. And as far as your illustration is concerned, that retrospectively, this is the same government which has actually done away with the retrospective taxation that was, applicable to the, these 4G operators, and they have actually done away with the retrospective thing. So we don't foresee any such kind of thing.
No, sir. But the problem is not with the intention of the government. The problem is between the communication between the two government bodies. The DIPAM in this particular another railway PSU. The DIPAM saying something else, and the railway ministry is saying something else, and then it create a fiasco in the stock market, and everybody in the world is laughing on us. So why we are concerned? If someday some Babu is going to come and tell that now it's going to be 0.3% on entire amount which you have disbursed, then there is going to be a huge implication on the stock price, and ultimately the big players. Hello.
Yeah, that question would not. No. That eventuality will not arise. I mean, that much I can tell you.
Okay, and sir, is there any possibility that DIPAM and because there is a possibility of the OFS also. So is there any way that DIPAM, you and the Railway Ministry comes out with the fine print for the 4 or 5 years? There is a 5 years commitment. So that will create certainty, and that was basically Modi Saab wants certainty for the business, ease of doing business. So then even big players comes and stock price start to performing according to the result which you are doing. You are doing great job, but stock prices are not reflecting it, not taking cognizance of it, and that is only because of some uncertainty, sir.
No, your apprehensions are well taken, but let me assure you that there is a good amount of coordination even now between Minister of Railways, DIPAM, and IRFC, and there is no such. We don't expect any such disruption to the detriment of the organization in times to come, and we can assure you that there is a very good coordination between the ministry and the other regulatory bodies.
And second question is, sir, you are because you are really doing wonderful job. The company is doing wonderfully. You are frequently meeting the bigger institutions a conference. So what inputs you are getting? Why the big players are not coming to and investing in our company? This is such a wonderful company.
No, they will be coming, and we are having regular investor meets also. We have started the investor meet, and we are talking to the other organizations also, and I think they would be on board. As you said that there are some apprehensions which need to be allayed. Otherwise, they have no reason not to invest in a script like IRFC's.
Yeah, it's really a wonderful company, and you people are doing really a wonderful job. Thank you, sir. Thanks a lot.
So kind of you. Thank you very much.
Thanks, sir.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Pramod Bhandari for closing comments. Over to you, sir. You may go ahead with your closing remarks. Members of the management, you all may please go ahead and give your closing remarks. So this is the operator. Are you able to hear me?
Yeah, we are able to hear you. Thank you very much. Thank you very much. And we'll again meet. Thank you.
Thank you on behalf of... Thank you very much. On behalf of DAM Capital, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.